Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market update. And in today's markets, guys, everything ending up very much in the red. I've even worn my red shirt to commemorate the loss of all of our gains that we've had over the past few months. Just kidding, guys. The markets aren't looking that bad. However, that being said, it was one of the worst sell-off days. At the peak of the sell-off today, QQQ was down over 2%, almost 2.2%, and even SPY was approaching 1.7, 1.8% to the downside. One of the worst, if not the worst day in months, guys. To find a day that was this red and this broad-based in terms of the sell-off, you would have to go back to the Federal Reserve interest rate day back in January on the 31st of January. And prior to that, guys, you would have to go back all the way to the month of October to find similar losses. QQQ, largely the same. Today, at the height of the sell-off, was the worst day since pretty much that same Wednesday session late in January here on the Federal Reserve interest rate statement day. And then prior to that, you would once again have to go back all the way to October to find similar losses. So, quick reminder, guys, we have been anticipating a potential sell-off due to our market seasonality. Now, this seasonality has not changed. If I can find my slide, sorry about that. Seasonality, guys, we were actually expecting this sell-off to potentially occur in mid-February. That never materialized. March as a whole is also reviewed as one of the more negative months in terms of seasonality, but the picture for the rest of the year is a fairly good one. And just a quick reminder, guys, nothing in terms of the macro data has changed. This is just a little bit of a technical sell-off, even if the sell-off were to manifest for the foreseeable future in terms of the next couple of weeks. It really wouldn't be bad in the grand scheme of things. Number one, in terms of technicals, your long-term bulls are always in control of all of your monthly timeframes across all of your major indexes. So on a technical standpoint, we're good. And on a macro standpoint, just as I reiterated yesterday, guys, the macro is good. The economy is very strong. We saw that last week with our GDP reports. The jobs markets are strong as well. We've seen that for the past 3-4 months at this point. Every single month, the jobs numbers are fairly good. And number three, interest rates are largely pretty much at their peak right now and should be coming down later on in the year. And that is just a testament to the Federal Reserve's ability to have brought down inflation as much as they have. Inflation has been trending down now for a better part of the last 6-7 months in a very sustained fashion. And the only thing that remains sticky in terms of inflation are services. And most of that component is largely due to housing prices. And housing is a bit of a lagging indicator. Those should be coming down this year as well. So as a whole, guys, the picture is just fine, but we could be due for a little bit of a technical sell-off after 4 months of insane rallies. Might just be time to take a little bit of a breather. And a quick reminder, guys, this is the buying opportunity of the year, in my opinion. Just focus on that seasonality, right? We want to be buying these dips so that the rest of the year we continuously get rewarded, as interest rates will be coming down later on in the year. So that's just a quick little insight into today's drop, guys. In today's video, we're going to be going over some of the services inflation data that was released this morning. We got the ISM service report, which is right here. We're going to present that to you guys. We're also going to go over a few earnings, actually only one earnings as a matter of fact, only Crowdstrike that I've prepared for you guys today. I wanted to do Target, but Target's earnings weren't that fantastic. NIO was there as well. The slowdown in EVs in China is still a problem, so I didn't really want to cover NIO as a whole. So we're just going to be doing Crowdstrike here, as they did have some fairly decent outperformance and very good guidance for the foreseeable future in terms of the next quarter and the next year. And then on Wednesday, tomorrow, guys, we may do either JD.com, potentially Abercrombie and Fitch, but there's really not that much in terms of earnings remaining. Thursday is going to be the big day where I really want to do a Broadcom, which was one of your leaders in semiconductors, and Costco as well, see how those two companies are doing. But for the large part, guys, earnings season is fairly wrapped up at this point. So before we get into our earnings, let's just review our heat map a little bit. You can see SPY down on the day, ending pretty much 1% to the downside. Had a nice little rebound into the last hour of trading. We'll see if that'll continue into tomorrow. QQQ down 1.8%. XLF barely squeezing out some gains. They had some decent gains throughout the most part of the day, but in the last 2 hours of trading really had a bit of a sell-off here, which kind of erased them. They were trading at about roughly 0.3, 0.4% to the upside, a large part of the day, but giving them up into the end of the day. So there was still some healthy rotation in financials. Healthcare down as a whole, and you can just view that all the better on the heat map, guys. The heat map really not looking good. Our major loss leaders of the day, well, no longer Apple and Google. Google not performing too bad on the day. now swapped positions with Microsoft. Microsoft having a 3% day to the downside, which is one of their worst days in month as well. And you can see here the sell-off was not just limited to Microsoft in terms of tech, a lot of things down a lot. Adobe 4%, Palo Alto down about 3%, Oracle down 3%, a lot of losses. And even in semiconductors, NVIDIA, even though NVIDIA etching out a little bit of a gain, you can see on that list on the screen right there, most of your semiconductor names pulling back on the day. It was no different in the software and applications division here. CRM, Intuit, one of the stronger companies in the market, they were down almost 5% at one point. CRM, Salesforce down 5% after outstanding earnings from last week. Even Autodesk down 5%. So the sell-off in technology has been started currently. Tesla down another 4%. But you did have some slight gains here across the market in terms of your consumer defensives, a few names in financials, largely your banks, and energy. But for the most part, guys, was a relatively ugly day in the markets. Energy and consumer defensives, you can see our outperformance here on the day, and to the downside, led heavily by technology, 2.31%. So technology will be offering a discount. It's been a discount that I've been waiting for now for a better part of the last 30 to 45 days. I was expecting it in February, but we're getting it now. So now was the time to make the most of it. It's time to be excited, guys. You should be excited, not nervous. We've been waiting for this for a while. I hope everybody's enjoyed the gains since November. And it's not saying that we are going to have necessarily a brutal sell-off, but just potentially some weekly consolidation could be very healthy for the overall markets and are going to present a decent buying opportunity for the remainder of the year. Keep in mind, it is an election year, so in the later part of the year, these gains should really be substantial. So with all that being said, guys, before we get into more technical analysis and see who is still in control of these markets, let us break down some CrowdStrike earnings, shall we? So let's take a look at CrowdStrike here, guys. CrowdStrike, after the close, up to $365, guys. Look at this after hours gain on CrowdStrike after the earnings, 23% to the upside. Extremely good result by CrowdStrike. What exactly happened? Well, they had a double beat and raise on guidance. So nice little beat here on earnings by about 15% on EPS, and a nice little beat here on revenue as well. This company is one that is growing excessively fast. Take a look at their growth in EPS over the foreseeable future. I'll move myself over before we do that. Take a look. Finally expanding on EPS, guys. The company is also now finally profitable for the fourth quarter in a row, which says something. So beautiful EPS expansion. We also have beautiful revenue expansion, really going exponential here into the next couple of years. And CrowdStrike is known to be one of your industry leaders in terms of cybersecurity. So I have a few little notes here. They're arguably the industry leader with Palo Alto Networks. Them and Palo Alto are really a close tie for number 1 and 2 in the entire industry. They're known to be the best at what they do in terms of breach prevention for cybersecurity. They had a Q4 beat and raise. They're finally net income positive, which is something that I wanted to show you here, guys. Take a look at CrowdStrike's prior earnings. You can see that in the past few years, 2018 through 2022, always net income negative. However, for the past 4 quarters now, these past 3 and the one that just ended today, they are finally net income profitable, finally bringing some of that money to the bottom line. The company also has a very low debt, which I really like for a growth company. It's saying something that the company was able to, maintain a low debt profile all while growing at negative margins. That is definitely a positive for the company. Take a look at their debt. Almost non-existent, right? They were coming into the quarter with only about $800 million in debt and cash equivalents of about $3 billion. And over this past quarter that's not here on the screen, it got even better. So very good balance sheet for the company. Decent free cash flow as well on a quarter-over-quarter basis. And look at these growth rates, guys. Through 2027, revenue growth, 21% average over the next 4 years, 4 years. EPS growth, fantastic at about 36% for the foreseeable future. Valuation is not that bad, guys. It gives them a 2024 PE of 98, which seems high at face value. But if you put that as a percentage in terms of their PEG ratio, so an expression of their PE versus their EPS growth, it puts them at about a 2.72 PEG. Quick reminder, anything between 1 and 2 is pretty decent. Under 1 is fantastic. Over 2 is slightly a little bit rich here. So the company, after their earnings gain here in the after hours, they are now at the new all-time highs at about 365, and they are slightly rich right now, in my opinion. The best time to buy CrowdStrike was pretty much back here, back when they were under $200. This PEG ratio was about 1.5, 1.4 at this point. So it was very good, but it was always a gamble because the company was not profitable and the interest rate environment was relatively high as well. So let's take a look at some of their headlines, and we're going to take a quick look at whether or not the company is moving forward in the right direction. Crowdstrike's shares surge on earnings beat, strong full-year guidance. So the cybersecurity firm has now reported GAAP net income for the past 4 quarters, as we were talking about, finally profitable. Management reiterated a 2030 goal of $10 billion in annual recurring revenue. This past year, they did about 3.5. So that's going to be almost a 3x in terms of revenue growth through 2030. Very ambitious goal, but if their revenue growth continues as it is right now, they should be able to achieve that goal. Now, Crowdstrike shares surged as much as 21% in after-hours trading Tuesday after the cybersecurity company reported a beat on the top and bottom lines, as we saw, plus issued stronger than expected guidance for the upcoming quarter and full year. Right, so the company guided for fiscal first quarter revenue between 902 and 906 million, better than a consensus estimate of 899. So they beat estimates by not even 1%, guys. Not that big of a beat on guidance here, but was enough to lift the share price. CrowdStrike also expects earnings per share in the period between 89 and 90 cents, better than the consensus estimate of 82 cents. So the revenue guidance improvement was only less than 1%, but the EPS guidance, what people most often look at rather, is about a 10% increase in EPS versus the expected guidance. So that is where most of your share price lift is coming. Now let's go through some of the company's financials to see whether or not they're set up good. And guys, as a quick summary, they are set up very, very good for the future. So here's the headlines for the year. Ending ARR, quick reminder, ARR is annual recurring revenue. So they run a subscription model on a yearly basis, of course. Ending ARR grows 34% year over year to reach 3.4 billion, which is absolutely amazing. Achieves fourth consecutive quarter of both record GAAP and non-GAAP net income. So profitable across both standards of accounting here. Delivers record operating and free cash flow. This is true, one of their best years in free cash flow now that they've been positive. So here's what the CEO had to say about their recent performance. Customers favor our single platform approach. Now, quick reminder, this is what Palo Alto is trying to do. Rather than selling 7, 8, 9, 10 different little tidbits in terms of cybersecurity, they would rather sell a one solution package to companies. That is what Palo Alto is pivoting to. CrowdStrike has already had this business model now for a few years running, and customers seem to love it. CrowdStrike is cybersecurity's consolidator of choice, talking about the consolidation between all these little different services into one package, right? So they're the cybersecurity industry's consolidator of choice, innovator of choice, and platform of choice to stop breaches. So he is very, very confident in CrowdStrike's ability to maintain that market lead. As I was saying, them and Palo Alto Networks, really close race for number 1 and 2 in the industry. Now, here's your highlights for 2024. Total revenue was about $3 billion, 36% increase compared to 2023. Very good. Subscription revenue was $2.87 billion, a 36% increase compared to 2023. I mean, they make about 98% of the revenue from subscriptions there. So these metrics should be largely the same. Subscription gross margin. Now, this is very important, guys. Their gross margin is fantastic. GAAP subscription gross margin was 78% in fiscal 2024. So that's revenue minus cost of goods sold. It doesn't include operating expenses such as selling and administrative, your research and development, and marketing expenses, right? So this is just the revenue of the product minus the cost of producing that product as a whole. Your gross margins, 78%, better than the 76% in 2023. So not only are they growing revenue, they're also expanding their gross margins. Very good. Net income here. So GAAP net income attributable to CrowdStrike was 89.3 million compared to a loss of 183 million in 2023. So not only have they now become profitable, but very good, turning in about $90 million of net income to the bottom line versus the big loss of almost $200 million last year. So very decent improvement by them. Here's your guidance, guys. I'm sorry if this is too small. Let me try and blow it up a little bit so you can see it. So total revenue, here's their 2025 guidance as a whole. And this guidance here, the midpoint is about $3.95 billion. That represents 29% growth from this current year into next year. So very good guidance, roughly in line with how much they grew through this year, a little bit less, but that's fine. The company's maturing. And here is your net income guidance for the future. It's going to be 10x of what it was this year. So you remember this figure I just showed you? They just brought into the bottom line about $90 million. Well, by the end of next year, that number will be closer to $900 million, a 10x from current standards. Very good, shows the company is going in the right direction. Now let's take a look at some of their financial statements, guys, to determine whether or not their income statement and their balance sheet is healthy. So do they have low debt? And do they have operating leverage? Are their revenues growing faster than their expenses? And the answers to those two questions are yes, the company is healthy in both standards. So here's your revenue growth year over year. You can see a nice 36% growth from the year prior. You can see as well that most, if not all of their revenue is really in their subscription division, as opposed to their professional services, which is basically just help to install, basically just support features, right? For when companies buy their products, implement their products. Well, then if they need some hands-on training or whatnot, the company provides that in the form of professional services. You can see that it's not that much of their total revenue. Now, in terms of their costs, so here is your cost of goods sold. The cost of this revenue directly only grew by about 25.6%. That is less than your 36% revenue growth. So company having operating leverage, they're able to grow their revenue faster than cost of goods increases. So it just goes to show, guys, that company is able to maintain, a higher growth rate in terms of the revenue than their expenses. Very, very decent. Nothing bad to say about this. Their total operating expenses as well shows the same thing. So have their expenses in sales and marketing, R&D, and general and administrative, have they been growing faster than revenue? The answer is no as well. They've only been growing at about 25.7% on a year-over-year basis, while revenue grows 36%. So company benefiting from operating leverage in both forms of expenses. Very good. Now, here's your net income. We saw that, guys, generating about $90 million as opposed to the big loss last year of about $183 million. So let's also take a look at their total stock-based compensation, because you guys know that I love this. So here's your stock-based compensation. They did have a 20% increase in relation to last year's stock-based compensation, but it does represent about 21% of their total revenue. So, I mean, it's not the best. I would like to see this number around 10% or below, but it's not terrible like we've seen in the past, especially with companies like Snowflake and the likes, where they're running 30-40% of net revenue stock compensation. So this is okay, just in relation to the fact that how fast they're growing revenue. However, I would like to see this number growing less fast than they are growing revenue. So let's say next year they grow revenue by about 29%. I wouldn't like to see this grow by more than 29%. I would like to see it still be maintained at 20% of total revenue or less. That is very important for this company to maintain. Now, because they don't do buybacks yet. Yes, they are getting free cash flow, but every time they do share, stock-based compensation, guys, it's diluting you as a shareholder. Just keep that in mind, especially if they're not doing buybacks yet. They could be doing them in the future, but as of now, they're just not. Now, one last look into their balance sheet will show you guys that now they're sitting on about, let's call it about $3.5 billion in cash and cash equivalents. So between their cash and short-term investments that they can redeem for cash, about $3.5 billion. And take a look at your long-term debt here as well. Let's call it roughly, $830 million. So really nothing much, guys. In relation to the cash that they have on hand, their amount of debt is really negligible. They're able to pay that off whenever they so choose. So very, very decent quarter by them, guys. Very decent year by CrowdStrike as a whole. My only problem with the company now that it's sitting at all-time highs is their valuation. 2.72 PEG is a little bit rich. And one of the things, guys, in cybersecurity is, I like to frame myself as being someone that knows a decent amount about cybersecurity, but compared to a professional in the industry, I probably know next to absolutely nothing. I can understand what the company does and how they're positioned and stuff like that. But cybersecurity, guys, is a very complex industry as a whole. Now, there's so many different companies, right? You have CrowdStrike, you have Palo Alto Networks, you have companies like Fortinet, companies like SentinelOne, companies like Zscaler, Datadog. There's just so many to choose from, right? In this case, what I'm probably going to do, because cybersecurity is such an integral part of this AI ramp that we're going to be having for the next 5 to 10 years, pretty much, cybersecurity is going to be crucial for a lot of these companies to be implementing as more and more of their data goes online and gets managed on the cloud. So AI cybersecurity is going to be front and center, and I do want to participate in these companies, but choosing the right one sometimes is a challenge. So what I took the time to do today not only for myself, but for you guys as well, as I looked into some ETFs for cybersecurity companies. So I found this article by the Motley Fool here, and they were recommending about 6 different ETFs. So I went through each one just so you guys don't have to pretty much. And here we have the annual expense ratio. So I wanted to pick some that have a relatively low management expense ratio, but I also wanted to pick some that don't have too many holdings because I don't want to get diluted by companies that have nothing to do in the industry per se, right? So a lot of these different ETFs, some of their top holdings are going to be companies like Microsoft and whatnot. And I understand why they put them out there, but they're just not pure form cybersecurity plays per se. So the one that I like the best, guys, is this Wisdom Tree one, as a matter of fact. Now, they don't have a very high, amount of assets under management, but the fund is very, very good. So they only have about 26 holdings, which is very, very good. Almost the same as this Global X cybersecurity ETF. They have a bit of a lower MER and they pay slightly higher dividend as well. So I went through this one extensively and I actually liked what I saw. Here's your top holdings for this ETF per se. And this is probably going to be the one that I'm going to be buying, guys, because I don't want to start trying to pick and choose different cybersecurity companies. The only one that I currently own personally right now is Fortinet. So I have a decently sized position in Fortinet right now, about 300 shares, but I do want to pick a little bit of these other companies as well, just because it's very unclear who's going to be the true winner 5 to 7 years down the line, right? So take a look at the company holdings in this ETF. And you can see here that there's no other companies than pure form cybersecurity companies, which is exactly what I want. Crowdstrike is number 1 with about 7.32% of the ETF. You can see Cloudflare's up here as well, Sentinel-1, a couple others that I don't know personally, to be honest with you, Elastic NV, Varonis Systems. But here you have Datadog, Zscaler, CyberArk, I know, Okta, I know, Palo Alto, I know, Rapid7, I know, Fortinet, right, FFIV, F5 Inc., that one I know as well, Trend Micro, Qualys, ACAM. So many of these companies, guys, Fastly Networks as well. So every single one of those companies is a pure form cybersecurity play. That's why I like this ETF myself. So I probably will be building a little bit of a position here over the course of the next few months in this cybersecurity ETF and kind of riding the wave with it as AI continuously expands. So hopefully that was helpful for you guys. Once again, the ticker is pretty much WCBR for that ETF if you are interested in doing some research on your own. So hopefully you guys enjoyed that presentation on CrowdStrike. Now let's get right into our technical analysis of our major indexes and see who is in control. Well, if it wasn't clear by this giant trend right here, the bulls are still in control, guys. We did not lose our lows on SPY, barely, but still we did not lose them. Those lows are set pretty much at 504.57. We came close, but still not losing them. So the bulls are still in control of this daily uptrend. You can see clear rejection off the 12 EMA today, pulled right into it and closing above it right now. So what we're going to be watching for over the next couple of days of trading, keep in mind, guys, that we do have a couple more events tomorrow. Tomorrow we have some jobs data, and we do have Jerome Powell testifying in Washington in front of your favorite politicians as to what the Federal Reserve is going to be doing in terms of monetary policy and the likes, right, over the next 6 to 12 months. So he's going to be having a prepared statement at first, which is going to be just a pre-prepared written statement. And then he's going to be answering questions for a couple of hours from politicians. And that's going to last pretty much over the next 2 days. And then we have more jobs data on Friday. So tomorrow, a lot of information tomorrow, jobs numbers, and Jerome Powell could be giving us a glimpse into some Federal Reserve data that we may not have been presented on his last meeting here on Wednesday, the 31st of January. So that being said, very, very crucial to look out for the next couple of days is going to be these lows, guys. If we break these lows, the bulls lose this beautiful daily uptrend, and we will potentially be setting up, guys, for a lower high into lower low. So that's what we're going to be looking out for the next few days. As of now, the bulls are still in full control, but we just need to keep an eye on who is in control of this daily time frame. Keep in mind, SPY has never lost the daily uptrend pretty much since all the way back in October, right? We had a little bit of a mishap right here where they didn't set the daily downtrend just yet. Daily downtrend would have been this. They lost the daily uptrend, but we were able to recapture the daily uptrend thereafter. We have never set a confirmed daily downtrend since the month of October. So if ever we pull back too much over the following days, set the lower high, and then potentially crack the lower lows, two things will happen. Not only will you have your first daily downtrend, but we'll also be breaching this trend line, and that's going to be notable to us. At that point, guys, we are expecting a bit further weekly consolidation, but look how much space the bulls have. Anything above 468, just going to be for a weekly higher low for further trend continuation into 2024. So all is still looking fairly decent. Just have to keep a close eye on where we land in the next few days. Moving on to QQQ. QQQ, same concept as well. Now, opposingly to SPY, QQQ has set the daily downtrend a few times in the most recent last month and a half, right? Whereas SPY has not. So what we're going to be keeping an eye on, guys, is this low right here. We almost flushed and closed below the low right here. 434.50 roughly, now closing slightly above that. So what we want to keep a watch on, your bulls are still in control. We have a little bit of a double bottom right now. If tomorrow we crack this, we lose the daily uptrend, and you could be setting up for lower high and lower low continuation. However, even all that being said, right, we could end up with a daily downtrend, and then even though we have a daily downtrend, bounce off the lower end of the trend line and simply recapture as we've done in the past. So it'll be key for us. If we do get the daily downtrend, guys, do we break this trend line? Only a loss of this trend line, in my opinion, for both SPY and QQQ will lead to further extended weekly downtrend. Not downtrend, but just consolidation, my mistake. So weekly still in a beautiful little uptrend right now. So we'll be keeping a close eye on the bottom end of that trend line. So far, the bulls do remain in control, but it's getting a little bit dicey at these lower levels, guys. Keep an eye for that. And for every which reason, guys, we do consolidate further on the weekly. The bulls do have a significant amount of space here. The most recent higher low is 421.85. So that's still a couple percentage points away, talking about roughly 3.5% away. And at that point, guys, the larger supports obviously come in at our previous all-time highs. That's a significant ways away, guys. That's still about 7%. So from top to bottom, that will be a QQQ correction of about 9% here for the month of March, potentially. I'm not expecting that much. To be honest with you guys, in terms of the way that the analysis is looking, we're probably not expecting that much in terms of a sell-off, but if it does get down there, it will be a heck of a buying opportunity. So I'm excited either way. I will be looking to add positions all the way down. For now, the bulls are in control. Let's not get ahead of ourselves. We're going to take this one day at a time, as we always do on the channel. Now let's move on to XLF Financial. So XLF Financial is kind of struggling here at the top. We're going to keep an eye on this level right here, $39.96 for all intents and purposes, guys. Let's call it $40 flat, this low right here. If we lose this low right here, could be setting up for the daily downtrend. If we get the daily downtrend in motion, guys, we will most likely also be losing the 12 EMA. 12 EMA has not been lost except for a few times in the most recent months, once there and once there in January. Aside from that, it's been pretty good defense. So if we lose it, has to be notable to us, and then we'll be looking out for the potential weekly consolidation. Look at this beautiful rally on XLF for the past 4 months. You can barely find a red week on this entire chart. So if we do start pulling back here, guys, target this area right here for a first stop. 38.86 to the downside at that point. We'll just be looking out for a higher low for further trend continuation. Anything above 37 is going to be looking for a higher low for further trend continuation. And to the upside, you guys know the drill. Previous resistance is going to be your all-time high area. 41 to roughly $42 is that range. Now moving on to healthcare. Healthcare, not looking too bad despite dropping about 0.75% today. Need to protect these lows here, guys. 144.45, we're almost there. If we lose this, healthcare will set a daily downtrend. Now keep in mind, healthcare has not set a daily downtrend pretty much since the month of October as well. Look, no daily downtrends. They almost had it here, double bottom, didn't close below, and then the bulls engulfed. So if we do get our first daily downtrend, it has to be notable to us at that point, right? And then we're going to be looking out for weekly consolidation. If we do get a bit of extended weekly consolidation, I've been saying this for a while, anything above 137.38, very healthy weekly consolidation, looking for a weekly higher low for further trend continuation into 2024. Who's in control, guys? The bulls are in control of all of these longer term time frames. Look how much space they've created from November, right? Even if we get some extended pullbacks for the month of March, it'll just be looking for monthly higher lows, guys, for a lot of these indexes and a lot of stocks as well. Healthcare specifically, if we are looking for a larger form pullback, I'd be targeting previous all-time high area, which is roughly the 142 zone. Also has nice confluence with the 12 EMA, this yellow moving average, which is right there. Now moving on to IWM Russell. IWM Russell, surprisingly, even despite the QQQ being down 2% at one point today, the Russell never really went further than about 1.1% to the downside, so holding up gains relatively well. We're still in a nice little daily uptrend right here, still looking for a daily higher low, anything above 196.30, looking for the daily higher low for further trend continuation. Now, we are above this big red zone, which was previous resistance, which should now be acting as support, but keep in mind, if the markets do fall off here for a couple of weeks in a row, I would be very surprised if the Russell can hold it up on its own all the way up here above this area. We may be dipping into this area, but keep in mind this entire area is going to be acting as support. That's 201 all the way down to about 194. And even on your weekly, guys, look at this weekly. Weekly has a nice amount of space to consolidate here. Anything pretty much above 187. Just looking for a weekly higher low for further trend continuation. So if there's one thing that I want the Russell to do, even if we do end up consolidating for a little bit here, need to hold this 194 low. Would not want to see the bulls dip back under here, because then we could possibly use this as resistance, guys. So need the bulls to hold up, but as a whole, bulls not looking too bad right now. Now moving on to the Dow Jones. Dow Jones also did something notable to us, guys. So the Dow Jones here down about 1% on the day. Sorry, let me move myself over. 1% on the day to the downside. The Dow Jones did something today that they haven't done in a significant amount of time. They set the daily downtrend. There has been no daily downtrends, right? No daily downtrends ever since the month of October at this point. No daily downtrends in sight. We now have our first one, and we lost the 12 EMA, this yellow moving average right here. You can see we've lost it a few times in the past, but none of these times that we've lost it have we been in a confirmed daily downtrend. So this is what I was talking about yesterday, guys. Has to be notable to us. Losing that means that we're in for weekly consolidation at this point, guys, and we're looking for a weekly higher low, anything above 37,150, looking for that weekly higher low for potential further trend continuation. The first line of defense, in my opinion, is going to be roughly around the 38,000 mark, which is your confluence with that 12 EMA on the weekly here. If we draw a nice little line right here, 38,000, you guys can see that on the daily, pretty much, this is going to be this line right here, this big line that I just drew. And for if ever which reason we dip even further below that, guys, well, we're going to be looking at our weekly higher lows to be acting as support. But I'm not expecting a tremendous sell-off in the Dow Jones. Most of this move down in the Dow Jones has largely been responsible by Apple. So just keep that in mind. We're now trending below our previous area of resistance, which was support. Now could be acting as resistance to just continue this daily downtrend ever so slightly into very healthy weekly consolidation at this point. Bulls with tons of space. Now let's move into yields. I want to show you guys yields because today was a bit of a funny one. So take a look at 20-year yields. This should be noteworthy to a lot of people. So take a look. We had a down day on 20-year yields by about 1.36%. 10-year yields were also down about 1.5%, but the markets were red. So yields are dropping at the same time as the markets are dropping. I thought they had an inverse correlation. Well, that's why, guys, correlation is a bit of a pseudoscience sometimes. Sometimes the inverse correlation is perfect, and sometimes it's just not. So today, both things dropping at the same time, right? Your market's dropping and yields dropping at the same time. But yields, we went over this yesterday, guys. We're just looking for the monthly lower high, monthly lower low into the rest of the year as interest rates will be coming down. It should bring these longer term interest rates down as well. On the weekly, how are we looking out for this monthly top into lower lows? Well, we were looking, when is the weekly trend going to be finished? And you know the weekly trend is finished when the bulls lose the most recent daily uptrend into daily downtrend. So this inter-time frame analysis is key. Notice how we start from the highest time frame, the monthly. We're looking for lower high into lower low. How do you know your lower high is set? Need to go on the weekly. When do the bulls lose the weekly? You can see they're in the process of losing it right now. How would you confirm it's being lost? The loss of the daily uptrend from right here. So now daily downtrend is set. We're going to be looking to continue that. And we're going to be potentially looking for the bears to engulf more and more of this move. As they take back more and more of this move, becomes more likely lower high, lower low into weekly downtrend. And that's when you're probably going to get your monthly follow through as well. So first things first, The daily bears need to take control. So that's step number one. We now have a daily downtrend. Then we're going to be looking out for the setup for the weekly downtrend. And then you may potentially finally get your monthly downtrend. But since these are interest rates, they take a long time to turn around. But it's nice to see the turnaround process is finally started. And as I said yesterday, the analysis on the 10-year is roughly the same. The analysis across most of your yields, guys, most of your longer term yields, right? 5, 10, 20, 30s is going to be the same concept, expecting a net drop off into the end of the year. Now let's take a quick look into Bitcoin and Ethereum, because we had a very volatile day on Bitcoin here today. So Bitcoin actually hitting a new all-time high by just a couple $100. So the previous all-time high was roughly 69,000, pretty much flat. And today we hit almost 69,325. And as soon as we hit the all-time high in the morning, you can see right here as of 10 o'clock, well, the drop was significant all the way to the low of the day, guys, almost 15% before recovering intraday. Now, obviously, crypto is somewhat manipulated by market makers, so it could be theorized here that a big portion of people were over leveraged coming into the market tops, potentially starting big positions in the last leg up leading into the all-time highs, expecting the crack of the all-time highs into an absolute moonshot continuation, right? But the market makers potentially, trapping those bulls and then giving them an extended 15% quick sell-off, potentially triggering some liquidation events. And that's why you see an extended drop-off right here, and the liquidation event happens, and then we have a quick little recovery here by the bulls. In terms of your technicals, guys, the bulls still in full control right here until we get a daily candle close below our previous low, 60,700. You are still in a confirmed daily uptrend. Now, if we were to lose that and set up the lower high into lower low, well, we have so much space for weekly consolidation, guys. Anything above 38,800, just looking for a weekly higher low for a potential next second stab at these all-time highs. So crypto looking very good. Tough for me to be buying up here. What I would most likely look for a little bit of a dip buy is necessarily a first daily downtrend. Keep in mind, we haven't had a daily downtrend, guys, since January, right? So when that happens, if it does happen close to here, daily downtrend means weekly consolidation. And then I'm going to be looking, guys, to play that little bit of weekly consolidation. If we can get down, again, under 60,000, talking about 57, 56, 55-ish, it'd be a very healthy dip buying opportunity for further continuation into 2024. Bitcoin, in my opinion, guys, end of 2024 and 2025 is going to absolutely fly. Interest rates will be coming down. The risk on trade will be prevalent once again. A lot of growth stocks will be getting some love, and a lot of crypto will be getting some love as well. So I should be expecting this one to move a lot higher. Now moving on to Ethereum. Ethereum pretty much ended up with the same fate as Bitcoin. Did not set new all-time highs on the day, however. They are still relatively far off their all-time highs, but we did break our most recent area of resistance, talking about, 3,500 up to 3,550. Next area of resistance going to be 4,936, the previous all-time high, and Ethereum suffering much of the same fate, right? So Ethereum setting that new 52-week high and then a brutal sell-off, just like Bitcoin, top to bottom, talking roughly the same 15%, big liquidation event, and now prices seem to be recapturing fairly well right now. Price largely recovered most of the losses over the course of the day. That being said, we are still in a very nice daily uptrend, clear as day, right? Clear daily uptrend. Just looking, any pullback is just looking for a higher low above 29.03 for very healthy consolidation. If for ever which reason we just continue in this hourly downtrend, which sets up potentially lower high and lower low daily downtrend, well, that's when we're looking for weekly consolidation. Anything above 2150, healthy weekly pullback. If we can see under 3,000 on Ethereum, that's where I'm going to be looking to add as well. But so far, so good. No red flags, just a little bit of a liquidation break to the downside after Bitcoin, really coming above those all-time highs. But not nervous for the sector as a whole, guys. Today was the first day, and keep in mind, I watch a lot of CNBC. I watch it every day. Today was the first time where about 2 out of 5 of the guests that they have started talking about Bitcoin. We're talking about regular asset managers. And you guys know the drill. I've said this time and time again on the channel, guys. People only get interested in any growth asset once it breaches a previous all-time high and starts rallying exponentially, right? It's the same thing with any stock, guys, just like SMCI, right? Nobody was talking about SMCI back here, but when it goes on the exponential runs and keeps breaching the all-time highs, everybody talks about SMCI. Nobody wanted ARM, pretty much ARM stock, right? After the IPO, nobody was talking about it, right? Nobody was even talking about it here when it had a significant rise to 71. Only after it has a meteoric rise past the all-time highs do people start talking about it. And now people are starting to talk about crypto. But take a look. Look at these volumes, guys. Volumes on Bitcoin, nowhere close to when Bitcoin. You see this when they broke the previous 20,000 all-time high set in 2017. We broke it right here. And then what happened? This is when all the volume came into the markets, right? Late cycle. You want to be in before all of retail, right, starts getting into it. So now is still a decent time, guys, to be buying dips on crypto. Sure, you won't have the same gains as you had down here in the 20s, but my price target by the end of 2025, guys, is over $100,000 for Bitcoin and roughly $10,000 for Ethereum. So take with that what you will, and I'll say it again, end of 2025, not 2024. So just keep that in mind, okay? Now let's move on to our major tech stocks, and then we'll pretty much wrap it up. So Apple once again dropping on the day here, guys. 2.84% to the downside. So what is happening with Apple, right? Well, you guys know me. I like to prepare some things for the videos here. So we have a bunch of little headlines here. The gist of the story, guys, is don't let short-term items and short-term headlines ruin a long-term thesis that you may have on a company. Very, very, very important. So here are the temporary issues, and they are numerous over the past month and a half. It seems as though Apple just continuously gets hit, right? Here's the temporary issues. $2 billion European Union lawsuit that we went over on the channel yesterday. 5 out of the last 6 quarters are showing flat revenue growth. They also have the China slowdown and increased competition from companies like Huawei, which are putting out fairly decent products. Keep in mind that Apple is still 4 out of the top. They have the top selling phone in China, but they also have 4 out of the top 10 selling phones in China. So just keep that in mind. People say that the Vision Pro is too expensive and that the product is a little bit too ahead of its time. They have a lack of phone innovation. A lot of people seem to have been complaining about this, guys, all the way back, almost 10 years at this point, right? Ever since the iPhone 6 and 7s, we're now well past that, and people are still saying, well, there's a lack of phone innovation. And then we have a last headline that's been coming about over the last couple of days. Is it possible that with all this selling and all these negative temporary headlines that Warren Buffett is selling his position? Well, you guys may know better than me, or know as well as me. Warren Buffett usually doesn't sell stock positions because of short-term media headlines. It's because one of his underlying fundamental thesis of a company is going to change. That's only when he sells a company. So with all these temporary negative issues plaguing the stock, we've had a decent little sell-off here, guys, from the all-time highs, roughly, down currently about 15%. And to the lower end of the support zone, if we were to go down all the way there, it's about 17% to the downside. But guys, we have to focus on why we are investing in this company. Here are your long-term pros. The company buys back 3% of all shares outstanding every single year. It does some of the best buybacks in the game. They bring in between 90 and $100 billion of free cash flow per year. The company is extremely profitable. Extremely solid metric there. Now, they have the best ecosystem in the world, guys. And if you want a proof of that, Warren Buffett actually brought this up in an interview that he did roughly about a year and a half ago. And I thought it was a great point, so I've always remembered it, guys. He brought up the following question, right? He asked the interviewer, when she asked him, why do you have such a large position in Apple? Why do you like the company so much? And he said, well, listen, they have such a good ecosystem that it's very tough to get consumers to get away from that ecosystem. And he gave the following example. He asked the question, if I gave you $10,000, but in return, you could never use another Apple product ever again in your entire life, no AirPods, no laptops, no iPads, no phones, no nothing, would you take the $10,000? And the interviewer, being someone who uses Apple devices, said no, $10,000 would not be enough for her to part ways with Apple devices for the rest of her life. And that is a very, very common thing. It shows how big of an ecosystem the company has, and it goes to show your brand power. The same question can be asked about a different item such as YouTube. If I asked one of you guys, if I gave you $10,000 right now, but the condition was that you could never watch another YouTube video, you could never go on YouTube for the rest of your life, would you take the $10,000? very arguable, right? That's when you know that a company has significant brand power and a significant moat. The same thing cannot be said about, let's say, something like the car industry, right? If I gave you $10,000 to never buy another Ford product, you'd probably take the 10 grand because you'd go buy GM, you'd go buy another brand, a Toyota perhaps, right? The brand power is not all there, not as strong as it is in something like Apple or YouTube or Google's YouTube, right? So just keep that in mind, guys. One of the best ecosystems in the world, huge moat with their App Store product, obviously, the brand power we just discussed, and their services as a percentage of revenue is increasing. Apple makes a ton of money on services and it costs them next to nothing. Their profit margins in their services business is over 80%, and it should be taking on more and more and more as the years go on. So very good long-term pros for the company. The rest of the issues that they're facing right now, guys, they're all temporary issues. So just let the company do what it does best. They have one of the best CEOs in the entire game. And I just reiterate that this continues to be a buying opportunity. So with all that being said on Apple, let's get into the technicals. Now, obviously, we are in daily oversold conditions. And as I was pointing out yesterday, guys, whenever Apple gets into oversold conditions, we usually get a decent bounce. And you can go back in time, and this does hold true, guys. January 2023, oversold conditions back here in September as well, which is marked by this low right here, had a nice little bounce, dipped a tiny bit lower, and then very decent recovery as well, right? Looking for more daily oversold conditions. Here we have back one right here in February of 2021. Oversold conditions usually leads to a little bit of a bounce. And we could even go back right here to the COVID days. COVID was a little bit of an outlier here. Let's take one before that, because that was really a destructive crash, right? But Apple tends to do this, right? Whenever we get oversold conditions, we usually have a decent little rally back up. So I'm thinking that this time is pretty much going to be no different. We are approaching the bottom end of one of our large support zones. So keep an eye, guys. This is obviously the level I've been talking about for a long time now. Previous all-time highs, previous resistance, support, all of last October, September, October sell-off was a good support area. I'm expecting the bulls to act as a bit of support soon here. The lower part of this range is coming up soon, about $166. So all that being said, I do think Apple still represents a good buying opportunity, but the bears are definitely in short-term control at this point. And this is fairly obvious with this chart right here. So we've been in a nice little daily downtrend this whole time right now. And this is pretty much our next leg down at this point. If you want the bulls to recover, step number one, we'll go over this again, need to see a reversal in the hourly trend. Once we get a new hourly uptrend, your daily bounce is going to be underway. And then we look how much of this big move down can your bulls recapture. If they can recapture, over 62% of this move, and I'll give you guys the level, I need to see, let's say we bounce from tomorrow, need to see the daily bounce get all as high as about 176.50 all the way to about 178. It sets the bulls up with the highest probability to regain this daily uptrend and put a stop to this weekly downtrend as well. So that's where we're going to be focusing on Apple in the forthcoming days, is when the bulls regain the hourly uptrend, how high does your daily bounce get? If the daily bounce only gets as high as, let's say, about 172, 173 before the hourly trend rolls over again, then we could be potentially expecting lower lows. So the size of the bounce is going to be crucial in the next couple of days. That being said, it is also a weekly downtrend currently, and we are in a little bit of monthly sideways consolidation right now. Keep a close eye. 166 lows definitely need to protect, but even if we do cut them ever so slightly, it would be a confirmed monthly downtrend, but still looking like an overall bull flag in the grand scheme of things, just some sideways consolidation before potential further price increases later into 2024. So keep an eye out on that for Apple. It's still one of my best picks for the dip buying right now. Now moving on to AMD. So AMD closing about 0.11% to the downside here today. AMD was actually down significantly over the day today. They were down as much as about 3.3% before recovering all of it and almost ending green on the day. But we're still looking out for the same thing on AMD. Analysis is super simple, guys. Daily uptrend confirmed right now. Just looking for a daily higher low. Anything pretty much above, $174, just going to be a daily higher low for further trend continuation. No red flags as of yet. If we do pull back, keep a close eye on this range right here. $181. Previous resistance should be acting as newfound support. No red flags. Red flags only happen if we lose the daily uptrend. Then we're going to be looking for weekly consolidation, and the bulls have tons of space, guys. Anything above 164, just looking for a weekly higher low for further trend continuation. So looking decent on AMD. No red flags as of yet. Moving on to Amazon. Amazon down about 2%, not able to close above their previous area of resistance. That's why this area is so crucial, guys. Talking about the 179 zone was always a big area of resistance for Amazon, all the way as high as the all-time high 188 with those little spike throughs. But 179, guys, is a fairly big one too. So with that being said, guys, we are still in a daily uptrend. Keep an eye on these lows right here, 170, 175. Lose those, you lose the daily uptrend, and you set the bears up for a potential lower high into lower low. If that does manifest, keep in mind we are just looking for weekly consolidation. Anything above 166, just going to be looking for a weekly higher low for further trend continuation. Now, the problem arises if we lose 166, that 166 weekly higher low right here could be setting up for maybe some extended weekly consolidation, which would just lead into a bit of monthly consolidation too. But Amazon with tons and tons of space on those higher time frames, anything above 119, looking for a monthly higher low. So if the month of March and early April even is a bit negative, just gonna be looking to buy any and all dips, guys. You guys know me. My preferred area for Amazon, 160. If we get down there, guys, I may even be throwing some leap call contracts at the stock because I think 2024 is going to be a record year for them in terms of the number of their financial metrics. Now, moving on to Google. Google, not looking too bad, 0.31% of the downside, largely stopping the bleeding. They went down all the way to 131.81 today and recovering nicely intraday. So Google at one point at the low of the day was down another 2%, but recovering fairly nicely here. Seems as though Google is finding a relative bottom in the area that we pointed out yesterday, right? This whole 132, 131 zone is our next big area of support. So just keep that in mind for the company. Seems to be reacting quite nicely after we lost this higher area of support, right? I've been talking about this one for a while, 141 to 138. We obviously lost that weekly downtrend in motion. So we target the lower one here, roughly at about the 130 zone. And then the lower one, guys, is obviously between 126 and 121. That is your last third and final area of support. But so far, so good. Bulls looking good. Still a huge buy the dip opportunity for, in my opinion, for Google right now. That being said, we are in a consistent daily downtrend. So when this bounce gets underway, when we considerably recapture the daily, the hourly uptrend, let's say that happens tomorrow, we'll be looking for the size of the daily bounce in relation to our most recent lower high, 139.80. This bounce needs to get at least as high as roughly about 137. If we can get up to about 137 on a nice little bounce, the bulls are set up nicely, create enough space for the daily higher low, for daily higher high reversal onto potentially a new daily uptrend. So that is what I'm looking out for on Google personally. That being said, weekly downtrend is in motion, which we just mean that we are in monthly consolidation. Anything above 121.78, just looking for a monthly higher low for further trend continuation. And your monthly 12 EMA is right there, guys, at about 130.23. So still very juicy dip buying opportunity for Google. Also Google off of your previous highs, right? 15%, looking like a nice dip buying opportunity like Apple. Moving on to Meta. Meta also with a big red day here today, 1.6% to the downside after a red day with them yesterday as well. But Meta not yet losing the daily uptrend just yet. Daily higher low is set right now, 479.38. So we're going to be looking for them to protect that. We're also in our previous, this yellow line right here, previous resistance should be newfound support, 12 EMAs right there. So if we do flush below this, it will be notable. We'll be losing a couple of things at the same time. This area of newfound support, and obviously your 12 EMA. So keep a close eye, 479 roughly, guys. Lose that, could set up for a daily downtrend. In that event, Meta does have a lot of space here, guys. Anything above 457.42, just looking for a weekly higher low for further trend continuation. No red flags with Meta's business whatsoever. And just to project into the future right here, if we lose the weekly uptrend right here and we set some weekly consolidation, take a look, guys, on the monthly. How much space do the bulls have for monthly consolidation? Anything above 282? Short answer is a lot. We could consolidate here for the month of March, even early April, and still be just fine, still be looking for a monthly higher low for further trend continuation. Meta is supposed to also post some outstanding numbers in 2024. Now moving on to Microsoft. Microsoft, one of their worst days in recent memory, pretty much since last October, guys. Even this day, the Federal Reserve Day here with Jerome Powell, Wednesday, 31st of January, only down 2.69. Today, almost down 3%. You would have to really go back here, guys, a long time. pretty much the 26th of October is your last day like that on Microsoft. That being said, we were wary of this daily downtrend setup. If they could not breach to higher highs with this attempt at a daily uptrend, well, the loss of these lows would be a daily downtrend confirmed. That's exactly what happened. So Microsoft now with the second daily downtrend in almost as many weeks, right? 2 daily downtrends in pretty much the last 3 weeks. Just goes to show, guys, that we might just be due for a little bit higher time frame consolidation there. When you see something struggle to maintain daily uptrends and constantly setting daily downtrends like this, just means there's a lot of selling pressure at the elevated prices. So daily downtrend confirmed. We then look out to the weekly. If we lose this on the weekly, guys, 397.58. Watch out. That would be a weekly downtrend on Microsoft. They would be joining 2 other names in weekly downtrends, Apple and Google. That being said, there's nothing wrong with the business. So this weekly downtrend right here would only be healthy monthly consolidation, in my opinion, guys. Anything above 311, just going to be for a monthly higher low for further trend continuation. I've always said, guys, if we can come back down towards this 380, 370 area, I'm looking to heavily buy this monthly higher low for further trend continuation. It's your previous all-time highs, previous resistance, should be acting as decent support. Monthly 12 EMA right there. That's the area I'm watching out for on Microsoft. Now moving on to Netflix. Netflix pulling back about 2.81% as well. Not a very good day for them, but still in a nice little daily uptrend right here. We were looking for any pullback just for a daily higher low, anything above 567, daily higher low for potential trend continuation. But if we do fall apart here and set a little bit of a daily downtrend, we may just be pulling back underneath this big trend breakout that we just had, this big previous resistance area breakout, that we just had. We'll be looking to set a weekly higher low, anything above 549 on Netflix, just looking for a weekly higher low at this current time. So Netflix still with a lot of space, no red flags as of yet here, guys. I would have some personal red flags myself. If we did dip daily downtrend under this area, 577 area of resistance right here, using it as resistance now and dipping a bit below at that point, that is when you might have some further extending sell-off. And I think if we do get that amount of sell-off, guys, we're probably going in the 530, 520 area for Netflix would be a very decent area for a monthly higher low for further trend continuation over time. So looking fairly good as of now. As of now, guys, no red flags, just setting you up in the event that we lose this fairly big level that's acting as support right now. Could get a bit lower, guys, could go down 530, 520. That will be a buy target for me on Netflix. Now moving on to NVIDIA. NVIDIA, guys, acting like nothing even happened today, right? 0.85% to the downside. At one point on the day, NVIDIA was actually red, hard to believe, right? 2.25%, but recovering nicely intraday. And we were always saying, guys, that we're just looking for a daily higher low. So still no consolidation. If consolidation does manifest into a few red days for NVIDIA, anything above 773, just looking for a daily higher low for further trend continuation at this point. No red flags at all. But if we take back too much of this move and we end up in a daily downtrend leading into the month of March, you guys know the drill. Just looking for healthy weekly consolidation at that point. Anything above 470, just looking for a weekly higher low for further trend continuation. A big level, guys, has to be this one. It's your previous resistance, should be acting as current support right now, talking about 742 at that point. Now moving on to Tesla. Tesla also looking fairly grim here today on the day. Another 4% sell-off after a brutal 7% day yesterday. So now Tesla really just giving back everything. This daily uptrend right now is completely shattered, right? So now the bears are going to be looking for a lower high into lower low. And that's what we were talking about yesterday to here, guys. They didn't put enough of a sizable bounce on the weekly to give the bulls a chance at resetting the weekly uptrend. Now it's just looking like we're going into furtherance of this extended weekly downtrend that we've been in since pretty much last fall at this point. Downside targets remain. We're at them right now. 180 down to 170 area of support. It is your previous horizontal support line. Downtrending channel should also be lining up there as well. So the next target for me, guys, to the downside, about 170. The bulls have just engulfed too much of this entire move now for the bulls to have a chance, in my opinion. So we're just looking lower high for potential lower low conversion on Tesla at this point. I will be looking to make some plays on Tesla at this point, guys, considering the fact that we could dip into March potentially for some of this seasonality, right? I could be looking for myself below 170 now at this point, guys. I've dropped my target by about $10 in relation to a potential broader market sell-off. Now we're really going to be targeting, guys, 160 down to 150, the lower end of this previous low right here. Now moving on to Palantir. Palantir not looking all that bad here today considering the heavy drop we had in the markets, 1% to the downside only. Palantir still in a very nice daily bounce. So we're just looking for a daily higher low to reset the daily uptrend. That being said, if we take back too much of this move, could be setting up for the daily downtrend. So all relies on the bulls' ability to play defense now. So keep in mind how much of the bears taken back already. They've taken back 50%, 61.8%. So the bears could be setting up, right, for the potential daily downtrend in motion. So we're going to keep that in mind. If ever they do get the daily downtrend, is it that big of a deal? Not that much, guys. Would just be due for extended weekly consolidation. They could be setting the weekly downtrend if you flush these lows, 22.33 as well. And at that point, guys, we'll just be looking for a little bit of monthly consolidation during the month of March and maybe early April. That's very healthy. If we do dip down into those levels, keep in mind 21 down to 20 area. These two yellow lines right here is going to be my target area. Big support in the past, previous all-time highs. So I would like to see Palantir come down there to give us a little bit better of an opportunity to average into the stock. If ever we don't get the daily downtrend, we get the daily uptrend confirmed, and Palantir just goes on a rocket ship to the upside and just perpetuates this weekly uptrend, you guys know upside target remains the same, about $28. And now lastly, PayPal. PayPal, guys, couldn't get it done again. Every time I bring this chart up, guys, you should be thinking of two things. Number one, are we above or below this big area of consolidation, 60 to 57? Well, now we're back inside of it. And number two, have we broken out of this massive downtrending channel right here? And the answer is no, unfortunately. So we don't have a technical breakout, so don't expect much momentum follow through. So PayPal down about 3% on the day. The area that we cannot lose, guys, is $57. If you lose that, not only will you lose this daily uptrend that we've most recently set, but also you'll be losing the crucial area that the bulls have been trying to defend at this point, guys, since the month of November. At that point, you're losing your daily uptrend. And if we close a week below there, guys, it's not going to look good for your weekly structure either. We're going to be maybe setting up for the weekly downtrend conversion as well. That would be a break and close below 57. That would be quite quite detrimental to the stock at that point. We could be heading towards $55, $54 at the low. At that point, guys, I would be looking to potentially acquire some new shares in PayPal. As you guys know, I sold my position prior to earnings around the $63 mark, expecting the broad market pullback here into February. Didn't want to take a chance on earnings. And so far, it's been the right move, but I will be looking to get back in the stock should we head lower. Indeed. So that's pretty much it for PayPal, and that's pretty much it for the video, guys. So if you enjoyed the video, consider dropping a like, would really appreciate it. And I do want to say a special thank you, guys. We are finally at 800 subscribers on the channel. You guys have made this journey extremely pleasant. I really appreciate all the questions, all the interactions that you've made on the channel so far. It really makes everything a pleasure for me to do. And hopefully the information that I provide and the trading insights as well have helped you on to your investing or trading journey, whatever that may be. So thank you so much for subscribing to the channel. It means the world to me. We're very close to coming up on that 1,000 subscriber mark, so I'm looking forward to it. And lastly, guys, as always, if you have any questions, please leave them down below in the comments. Anything you want, whether it's a stock you want me to look at specifically, an earnings call that I maybe have missed that you want me to take a deep dive into, some technical analysis, an options play that you've been considering that you may want some additional insight in, whatever you want, guys, leave it down below in the comments and I'll get back to you within the first 24 hours. So take care. Let's be excited for this dip buying, not being nervous. I've been calling, for a better part, you guys know, since mid-February, guys, I've been saying might be time to write some covered calls, take some profits on some positions that have run ridiculous amounts, right? And I still do maintain that. Could be some time to take some profit off the table, wait for some juicy dips, and let's buy some solid companies like Apple, guys, at 15% off. Let's buy some solid companies like Google at 15% off. Keeps dropping 20% off, right? You guys know the drill. Later, second half of the year should be absolutely amazing, not only because of regular seasonality, guys, but also because of interest rates coming down. So just keep that in mind, looking fairly good. And I just remembered, I forgot to cover in all this, in the midst of going over how red the market was today, I forgot to present you the services report for the ISM services. So actually, let's do that right now before we conclude the video. my bad about this. So services PMI actually came in lower than expected here, guys. If you may remember, in the month of January, which is this peak right here, we had an uptick in services, and you guys know services have been the stickiest part of inflation so far. So nice to see that for the February read, they actually had a 0.8% decrease compared to January, which is very, very good. And I just want to show you guys the table that's coming in right here. You can see that for the most part, the overall economy is growing, although at a slower pace. This is in terms of inflation data. Your services sector also like that. It is growing, but it is now growing at a slower rate. So very, very good. And the main point of this report that I'm going to point out, guys, look at your prices. The prices are key for services. Look at this percentage decrease, guys, 5.4% to the downside in terms of services prices. Demands have still been roughly strong. New orders, business activity, right, is still roughly good. So that's a good sign, but decrease in prices. That's exactly what you want. So now our last component of sticky inflation finally trending to the downside. So it was a beautiful report as a whole, guys. Nothing bad to say about it. And the market actually did react quite well to this number as a whole. So looking good. That's actually one of the major contributors to the reason why your yields were lower on the day. So hopefully that was helpful. Apologies for not doing it earlier on in the video. So with all that being said, guys, I will see you tomorrow. Happy dip buying, happy trading. Love you all. Take care and peace.